Oracle stock just exploded to more than 12% after earnings, and what makes this interesting is that yesterday we analyzed Oracle before the announcement using gamma exposure, trying to identify key levels where market makers could start edging. And this morning, the stock pushed right into these areas. If you haven't watched that video, make sure you go and watch it. I will link it somewhere here and then come back. If you're new here, my name is Japheth and welcome to Market Open, where we break down how market mechanics and option positioning influence the way stocks move. Now, let's take a quick look at Oracle earnings from yesterday. The Oracle Cloud Infrastructure brought in $4.9 billion, up by 84% year over year. Cloud applications brought in about $4 billion, up by 13%. Software support bringing in $5 billion, up by 4%. Software license bringing in $1.1 billion. Hardware $0.7 billion, up by 2%. And lastly, we have services, which brought in $1.4 billion, up by 12%. That's amazing. Total revenue for Oracle was $17.2 billion, up by 22% year over year. Net profit $3.7 billion with a margin of 22%. But here's where things get even better. They issued a great guidance for financial year 2027. You can see here they have raised their guidance by $4 billion to $90 billion. That is an amazing guidance, and that is what I was looking for in this stock. Oracle has a market cap of $471 billion, and it pays you a very nice dividend of 1.22%, which is equal to $2 per share. And if you look at the price forecast from analysts, you see that 34 analysts are covering this stock, and they have a buy rating, consensus buy rating, with an average price target of 268, which forecasts a 63% increase in the stock price over the next year. The lowest target is 160 and the highest is 400. My own target is $300 because we have seen the stock hit those levels before. That brings us to gamma exposure. Let's take a look inside our platform here, Sweep Algo. And I told you yesterday that gamma flip point, it was at 152.59, and this is the most important level on the entire chart. The gamma flip point is the line between positive and negative gamma for dealers. When price is above this level, dealers are in positive gamma. They absorb volatility and moves become more stable. When the price is trading below this level, dealers flip to negative gamma. They amplify every move and volatility spikes. Now, we went from trading below 152.59 to trading above that level, and as you can see, we had a positive gamma of $14 million yesterday, and now it has moved to $99 million. It was around 111 this morning, $111 million. The next level that I told you about is the gamma wall, and the gamma wall was at 170, is still at 170, and here it has a score of 4 with a resistance overhead. Price is below 170 resistance. Until that level is reclaimed, directional risk remains skewed to the downside / chop. Now that happens to be a profit taking zone, and as you can see here, we go back to Think or Swim, you can see market makers and dealers ran it up all the way to 170, 171, 76. They're taking profits, and everybody is getting shaken out. So this means a lot of traders end up buying at the resistance and selling at support. So you have to be very careful with that. And for those who are new to gamma exposure, gamma wall tends to be the ceiling of the stock. And as price approaches to 170, dealers are forced to sell their shares to edge the delta. By looking at this AI analysis, you could have taken the 165 puts on the downside as market makers were edging their delta. And as you can see, the stock completely pulled back from the 171 to 164. You could have walked away with a nice profit of more than 100%. Now let's talk about something called max pain here that I taught you yesterday. This is the price where the maximum number of options contracts would expire worthless. It is the gravitational center. the level the market wants to pull the price towards going into expiration. And in this case, we have 175. We had 175, still at 175. So contracts that are in max pain are here in 175. They will be expiring worthless if we don't continue to run. The stock does not stay above 155.44, the gamma flip point. Expect to lose money, and that is going to be your tuition. Make sure you get yourself a tool like this to avoid making those mistakes. So instead of looking at this and thinking it's completely random, it's useful to understand the market mechanics behind it. If you enjoy breakdowns like this one today and you want to get better at understanding how the market actually works, make sure to subscribe and give this video a thumbs up. This is exactly the type of data I'm building inside SweetPogo platform, where traders will be able to see gamma exposure and options positioning in real time before these moves happen. If you want to check out platform, the link will be pinned in the first comment. And always remember, understanding market structure will always give you a better edge than simply guessing where price might go. I'll see you in the next video.